Good morning, everyone. This is Building a Safer Future, Navigating Digital Currencies in the Modern World with our host, Tashiana Bright, Section Chief with the Federal Bureau of Investigation.
Thank you so much. Good morning, everyone. We just want to thank you for spending time with us today. We hope that you get a lot out of this session. We know with all of the other sessions at RSA, you could be anywhere else. So thank you for that. I'd also like to thank our panelists who have taken the time to spend time with me today. I'm going to go ahead and get started with the introduction, so you know exactly who's up here. To my immediate right is Ajoy Kumar. He is the head of application security for Wells Fargo. Wells Fargo and Company operates as a diversified financial services. The company provides banking, insurance, investments, mortgage, leasing, credit cards, and consumer finance. Wells Fargo and Company serves physical stores, internet, and other distribution channels worldwide. Next to him is Philip Martin, who is the Chief Security Officer for Coinbase Global Incorporated. Coinbase is a secure online platform for buying, selling, transferring, and storing cryptocurrency. And finally, we have Claudia Quiros, who is the director, newly the director of the U.S. Department of Justice's National Cryptocurrency Enforcement Team and deputy chief of the Computer Crime and Intellectual Property Section. The INSET will, identifies, investigates, supports, and pursues the department's cases involving the criminal use of digital assets with a particular focus on virtual currency exchanges, mixing and tumbling services, infrastructure providers, and other entities that are enabling the misuse of cryptocurrency and related technologies to commit or facilitate criminal activity. And with that, we'll go ahead and get started with our session. First question is, as cryptocurrency emerges as a thriving financial market, opportunities for illicit activity will inevitably arise. Can you talk a little bit about how your organization views the current financial services landscape? I'll start with you, Ajoy.
Thank you. So first of all, I'll put a disclaimer. The views I share are mine, don't represent the views of the company and also any previous companies that I worked for. Having said that, the key question here is, right, what is digital money today? And the digital money that we are talking about is a programmable money, and that's like the counter thesis of the money that exists today, because money has become programmable. But before we go deeper between like what is sovereign money, what is non-sovereign money and all that, I think we need to see how we have come here and what are the forces at play. So first thing I would say is like this genesis started with Web 1, where there was essentially like a basic interfaces where you could have interaction with internet and get some information. Then came Web 2, where you started seeing, okay, there was information, there was data exchange, and everything was getting centralized. And then there was security and privacy issues. And then comes basically like Web 3, which is rich with experiences. There is a distributed ownership, distributed trust. So the innovation space basically expanded multifold. So those are like the genesis on how do we progress. Given that these instruments are here, Wells Fargo, like any other bank, basically is very interested in the payment and deposits, and we are equally interested in the settlement use cases. But we want to basically make sure that these use cases that we are working are in the premises of the regulated markets. So that's how we are looking at internally. We have basically tokenized our cross-border payments using international cross-border payments using the tokenizations. And we are also participating in a number of external public-private partnerships like RLN. And there are like fascinating things happening in there where they are sort of like bringing multiple versions of currencies, multiple visions of the currency, commercial currency, and CBDC for settlements in a single payment network. So we are watching this space very carefully. And another thing that I can mention is like this market developments need to mature fast because there is a lot at stake here. We'll continue discussion on that. So that's my initial views.
Thank you so much. Philip, your thoughts?
Yeah. So I think you hit it on the head that that blockchain and digital currencies are developing a thriving ecosystem. With that, unfortunately, does come bad actors, right? Criminals follow the money, just like everybody else, right? And I think that one of the interesting things is that we are in a position with blockchain where it's a fundamentally different asset, right? Where it is in many cases, obviously this is currency dependent, where it is transparent, where it's traceable in a way that is very hard to do with a dollar. And I think that as that matures, and as we just talked about, as Web3 sort of grows into its own new thing, we will continue to see that infrastructure grow and mature. We'll continue to see the tools to prevent or to trace or to track criminal activity, such as blockchain explorers and other similar things, continue to grow and develop, and in my opinion, probably become superior to try to trace cash, especially as we talk about movements internationally and things like that. My fundamental position here is like, look, I've been at Coinbase for 8 years now. I have no idea what's going to happen tomorrow in cryptocurrency, and I would be lying if I said I did. But I can say I think that we will continue to see interesting developments in the infrastructure of digital currency that play into both innovation in financial services, in helping people access financial services that couldn't before, as well as ensuring that bad actors, the impact of bad actors is minimized.
Thank you so much for that valuable insight. Moving on to question number 2. Your organizations have a shared mission of providing a safe and secure method for customers to conduct financial transactions around the world. I want to shift the conversation to the threats to financial services institutions and the current efforts to combat them. What do you see as the most significant threats to the industry? And I'll start with you, Claudia.
So I started working in the cryptocurrency space about 4 or 5 years ago. I've been with the Department of Justice 10 years. And initially, you saw darknet markets, like the takedown of Silk Road, then it evolved into business illegal compromises. And bad actors have gotten more and more sophisticated, as we all know, and the landscape has changed significantly. As Phil said, who knows what the future will bring in crypto. But the Department of Justice has really made it a priority to focus on the threats and misuse of cryptocurrency, and has taken several steps to focus these efforts. One of them was by the creation of my team, the National Cryptocurrency Enforcement Team, which was launched 2 years ago. I joined the team right when it began. And whereas the Department of Justice initially focused on prosecuting these type of cases in different districts, this is intended to be like a nerve center, a center of not just for us to prosecute and investigate these cases, but also to be a source to the field, to focus on strategy, priorities, and build the cryptocurrency experts around the country. And that followed with the creation of the Digital Asset Coordinator Networks, which is over 150 prosecutors across the country that specialize in this. So we have grown our expertise and continue to do this work as the threats have evolved. So with Web3, with DeFi, even now we see an intersection between like blockchain and AI. And so what threats do we see now? Scams and fraud continue to be a huge threat. Pig butchering, crypto confidence scams, the losses are massive. We get so many referrals. It's all over the place. Thousands and thousands of victims, millions of dollars in losses. We see hacks and heists and thefts continue. North Korea, nation-state actors, ransomware has increased since the incidence of ransomware since last year. And fraud, and the government has continued to pursue the bad actors in all of these areas. And if you look at just in the last, since the NCET was created 2 years ago, the department has seen a lot of successes in tackling the misuse of cryptocurrency. But if you look at just the last 6 or 7 months, there has been so much activity in terms of the department focusing and prioritizing criminal conduct in this space. And just to name a few examples, in November of last year, actually my team in collaboration with the Northern District of Georgia, FBI, and our foreign law enforcement partners, we took down the cryptocurrency mixing service, Sinbad, which was used by the North Korea Lazarus Group and others to launder money. You have obviously the FTX and Sam Bankman-Fried prosecution and recent sentence of 25 years. You have Binance, Bitcoin Fog, another mixer that went to trial just a couple months ago. The operator was found guilty. Even, you have this Samurai Wallet, another case that was recently indicted. And then you have, cases that are coming up, like, Tornado Cash is a trial that is going to be happening this fall and that a lot of people are very interested in. So we've had a lot of successes. Obviously, the technology continues to develop and we try to keep up and look to see what's around the next corner. But I think we're well positioned to continue working towards trying to root out bad actors and prioritizing not just holding people accountable, but returning funds to victims.
Thank you so much, Claudia. Philip?
Yeah, I think Claudia, you hit on a bunch of stuff, right? That's very, very important, including when I think about threats to financial institutions in crypto, there's the obvious technical threats, North Korea, et cetera. And then there are things like consumer protection, right? Which is, I think, a key element in the success of cryptocurrency, right? The way I talk about this a lot is like my mom should be able to be safer using crypto than using cash, right? And there's a lot that goes into that. Scams are not uniquely a crypto problem, but they are a problem that impacts crypto because of the finality of transactions, right? And the solution there, or the work that my team, among many others, is doing, is really about number one, obviously making sure people have the tools necessary to protect themselves. But number two is just pure education, right? I tell a story a lot that, like, we were all, in this room, we probably all grew up around the kitchen table and we learned some basic facts of being safe in the world, right? Pause your mail when you go on vacation. Don't walk down the dark alley, right? Don't count your money in public, things like that. And we all learned probably subtly different lessons in different times and different cultures. No one grew up asking about password managers around the kitchen table. No one grew up talking about online safety around the kitchen table. Hopefully that's going to start to happen now with the current generation. But I think what it really leads to is we all have a lot of skills and reflexes to grow and learn and develop in order to be safe and safe in the same way that we are when we walk around a city, right? And that means that unfortunately, lacking those skills makes it easier for scammers to prey on victims, whether that results in a cryptocurrency loss or a cash loss or personal information loss or whatever it is. And so I think I focus, among many other areas, on exactly that, right? How do we make sure that when my mom opens up her Coinbase wallet app, that she is just as safe, if not safer, than when she's transacted in any other currency?
Thank you for that. Great points. Certainly, we're all committed to education, that education piece, to make sure that everybody stays safe while completing these transactions and using these new techniques and technologies. Next question. Criminals have targeted the financial services industry since its inception. I want to pivot to how cryptocurrency has changed the theft landscape. Let's spend a few minutes discussing some key aspects in this space. Philip, I'll start with you.
Yeah. What's the classic saying when someone asks a bank robber why he robs banks? The answer is because that's where the money is. I think very, very true, right? Since I would assume since the day after someone invented a concept called money, someone else was trying to steal it from that person. And the techniques have evolved, the tactics have evolved, the criminals have evolved, obviously. But I think that there are no sort of new, nothing's new under the sun, right? The details change, how the attacks happen change. And I think with crypto, we have the fascinating opportunity to, as we talked about earlier, as programmable money, to fundamentally protect it in a different way, to allow for that dollar or that, pick your currency, to, in a way you can think of it as to defend itself, right? In order to not allow itself be moved in certain ways, and to build that right into the currency. I think that's a fascinating difference. People talk a lot about how crypto is more vulnerable or more at risk, and there are elements to that. Again, the finality of transactions makes that very difficult. People talk less about how crypto can be harder to steal, right? Because of the tools that we can build right into that assets. That's an area I'm excited about as we see this continue to grow and develop.
Absolutely. Ajoy.
Yeah. So the banking, I think Philip made an important point, right? Since the money was sort of invented, somebody is trying to steal. But I think the fundamental question is slightly different here. The fundamental question is, what is e-money? What is the vision? Because every version of the e-money is a different version, and we need to establish, like, what does this money represent? What values it represents? What is proof of value? So we basically are in a dialogue that has to be sorted out, because every sort of like currency, programmable currency, is offering a different vision of money, right? Having said that, the fundamental things which, for example, in banking exist today is like, and this is for any big banks, somebody is accountable for that fiat currency. Somebody is responsible for that fiat currency, right? And banks, for example, have series of regulations, like banks have to worry about liquidity risk, market risk, systemic risk, and other things. And there are a number of basically provisions for managing those risks on an ongoing basis. So like giving you a couple of examples, any bank has to do KYC, AML, CFT, which is countering finance terrorism, extra enhanced due diligence, and there are multiple basically jurisdictions where these requirements have to be met. But in the case of the programmable money, where is the jurisdiction? Where is the legal framework? Where is the supervisory framework for that? That has to basically like come into existence, right? There is individual protections you get from the FDIC insurance. You can safely deposit your money into accounts, and there is a protection for that. And you, from the GLB perspective, you always know that what are the how is your data being handled? Is it handled safely? What are the practices that are there for safeguard of your privacy? And then there are provisions from the Fair Credit Act and all that, which basically make sure that if there is identity theft, you know which transaction caused that identity theft, because business is responsible to give that piece of information to you, right? And I know we argued a little bit about like this money, essentially, the e-money that we are talking about makes things faster because it's Web3 is fascinating. It's trustless transactions which you can have, and we want our parents to be safe while using that, right? But I'll just throw out like a couple of statistics that came to my attention, and I do not know if Kevin Thompson is in the room or not, but he basically shared this with me. So Jim Richardson is with I think RegTech. He has done a couple of congressional testimonies and all, right? So I got like 2 key statistics from him which were fascinating to me. First, he says that there is only $10 billion of illicit activity happening in cryptocurrency versus 1.6 trillion illicit transactions happening in the fiat money. So that's a big difference, 10 billion to 1.6 trillion. But here is the context becomes super critical. That 1.6 trillion in fiat illicit activity is happening on a base of $2 quintillion, which is 0.00002%, which is like every 20 cents in $1 million are illicit. But we basically compare the same statistics on the other end. 10 billion is on the base of 2.94 trillion, which is $3,400 are illicit in the $1 million that are going in the e-money. So these are like facts that I found. And then that basically triggered my interest, like how is the SEC like thinking about this thing? What is the enforcement happening on that? So I analyzed the data from January of last year till March of this year, 35 cases. And they were no different, as Philip, you said, money laundering or basically affinity frauds and all that. Nothing new under the sun, as you said, right? But what was unique was the speed at this happened. Number of people that got involved so quickly and how basically their financial ruin started because of just sheer volume and speed that was so quick. And this actually led to, and as I was thinking more about it, I came across like last year, Federal Reserve governors and OCC and FDIC issued a joint statement for the banks about like risk management practices in the crypto space, right? Which are very focused on governance, very focused on how do you stop the volatility or reduce the volatility and risk management practices which are core to the financial industry. That's where basically the focus was. So I think while Web 3.0 is very fascinating, having a supervised and regulated marketplace is what like end customer would trust in.
Thank you, Claudia.
So I want to put a different spin on something that Joyce said, which is, the idea that the losses in cryptocurrency are less than in fiat. And just take two examples, for instance, like pig butchering, and I saw some nodding when I mentioned it earlier, crypto confidence scams, and thefts by North Korean actors. So with pig butchering, last year, the reported losses right? It was close to $4 billion. It's probably significantly higher because it is people who fall victims to pig butchering, they're embarrassed, right? So there are many that are not reported. And what you have there is, it's one thing if somebody, gets scammed and, in regular traditional fiat maybe gets money stolen and, think of a variety of traditional ways. But with pig butchering scams, people are losing their entire life savings, and it's pervasive. People are committing suicide as a result of these scams, and they continue. And one thing that we mentioned is education, and that's one thing that we're trying to do is educate the public. But that's one area where if you tell a pig butchering victim, well, the losses in crypto are not as much as in fiat, they're going to have a different perspective. Also, take North Korea, right? The amount of money that they've stolen through hacks, where is that money going? What are they doing with it? It's to develop weapons programs. So maybe it's not as much as fiat, but you think about the amount of money that is going to North Korea and what they're doing with that, it's a severe cause for concern. So just wanted to put that finer point on what Joy said. And so to answer your question, we see DeFi, decentralized finance, as one of the fastest growing segments of cryptocurrency. And in the space, in the department, we're continuously grappling with evolving technology and how things fit into an existing legal framework. But like Deputy Attorney General Lisa Monaco said yesterday in her keynote speech, when talking about artificial intelligence, fraud with AI is still fraud, right? Fraud with crypto is still fraud. And so you have new and evolving technologies, but you still have the same types of crimes, right? The traditional types of crimes. And so in the last 10 years, where the department has been focusing on prosecuting and investigating cases involving cryptocurrency, we've learned a lot. There's been a lot of change, but now we're in the growing up period. And we're asking a lot of questions. We're trying to adapt and evolve. And I talked a little bit about the efforts that the department has made in developing our resources and our expertise in order to be able to address these threats and to define the role that the government plays in this ecosystem. And even as we see more and more, artificial intelligence is not new. But we're seeing it, more and more, like the intersection with blockchain technology, with deep fakes, and just how, think again, going back to pig butchering, the scale is massive now. And I think about, powered by AI, how much more dangerous it's going to be. Also, as Dag Monaco referred to, with AI, it's like things are supercharged, just like criminal acts are supercharged. Well, maybe so are the tools that we can use to try to combat this. So a lot of the lessons that we've learned in crypto in the past few years is we've tried to, again, like I said, try to build it into an existing framework. I think with AI, we're going to see a lot of the same things and questions and inquiries, and I think there's we're going to be learning, or we're going to be using a lot of the lessons that we learned in the past few years in crypto as it is applied with developing technologies, including artificial intelligence.
Thank you so much for that. I think you brought up an important point about people being embarrassed. And certainly, that makes sense. However, if you're not reporting that you're a victim, then it limits the ability for us to learn and to figure out what kind of tactics and techniques are being used for these scams. And so it's really important that education piece is out there to say, hey, we know that this was, maybe it was a romance scam or something and somebody took your money, but our ability to actually act on the crime is dependent upon those reports. So, moving on, clearly there's a lot keeping you up at night. The government and industry have several ongoing efforts aimed at improving our nation's cybersecurity and supporting the private sector. Can you please discuss public-private sector efforts to understand and mitigate future threats? I'll start with you, Ajoy.
Sure. So public-private partnerships are key to advance this definition of what money is, how we'll use it, so that truly believe in the mission and vision of the public-private partnership. And it is paramount that we get it right. And the reason is because I have been arguing that there has to be somebody who is accountable for money. And also, like, money represents the value system. So one of the projects which basically I find fascinating is Digital Dollar Project, right? So if you follow Chris Giancarlo, who has written the book on the future of the money, he's pretty much argues that, and this is like fascinating read, that money is what supports our First Amendment and Fourth Amendment, which is linked with your rights of privacy, the fourth one, and your freedom of speech, religion, assembly comes from First Amendment, right? And he says if American value systems are not built into the dollar or the future of the dollar, we could lose our status as a reserve currency of the world. So he makes it like compelling case that US government must step in and define what basically the future of the money looks like, and getting involved into that discussion is fascinating. So that's one of the public-private partnership which is front and leading. I talked about the regulated liabilities network from the Federal Bank of New York, and they have an innovation center where they basically like experimented with like CBDC and also with commercial money on the same payment network, which is huge. I believe truly that public-private partnerships basically will advance what the money has to look for. In my view, there should be like 4 outcomes that the public-private partnership should be defining. First is defining what the vision of the money is, money of the future is. Second is like key, very important, that we should align our supervisory regulatory framework for this future of the money, because in absence of that, the trust would not be there. And third is develop this new infrastructure, payment infrastructure, because in future, as we saw during pandemic, there is a lot more e-transactions happening, right? So the payment versus payment, delivery versus payment, these aspects have to become much faster, and the volume and velocity is going to increase multifold. So we have to use the capabilities that are being offered in Web 3.0, and that's where basically like we have to develop that infrastructure. And last point, on the fourth point, is basically we need to develop new marketplace practices for data sharing. What can be shared, what can be shared, who is recipient, who is not, how basically that data, the metadata and secondary data can be utilized. Those practices have to be developed, right? So public-private partnership will be extremely important in developing those marketplace of the future. It's without that, you basically cannot advance the practice fully.
Philip, your thoughts?
So I think the point about CBDCs is fascinating. First of all, whether technically aside, whether politically the U.S. will ever be able to issue a CBDC, incredibly interesting question. Not for this panel, but I think public-private partnerships are absolutely key. Taking just one area, pig butchering, as a perfect example here, right? We do a ton of work, both before people are victimized and with victims themselves. And a very interesting stat that we have on that is if we encounter somebody in the midst of a scam and we're able to let them hear from a previous victim, there's a 95% chance they exit the scam without losing anything. 95% of people, if they can hear from someone who went through it before they did, which is incredible. It speaks to the absolute criticality of education in this space. But at the end of the day, right, my role in this is limited. I can't issue subpoenas. I can't prosecute criminals. I can't go after the for lack of a better word, factories that execute the scam based overseas. My role is focused on preventing, where at all possible, responding to, educating, informing, and working with other private sector partners to solve the problem. Unless we partner with our public sector allies here, that's all we can do, right? So really focusing on building those partnerships, working with law enforcement. We spend a bunch of time doing that. We have a whole team that does nothing but that. In helping law enforcement around the world, right, understand what happens in digital currencies, what happens with crypto, what happens in these scams, and hopefully bringing some of these bad actors to justice to dissuade other future bad actors. Absolutely critical. Second, I think there is exactly what Ajay just said. There's a huge role in public-private partnerships around data sharing and around sort of collaboration around intelligence and analysis, right? The classic sort of ISAC model. Again, like we all have different tools, we all have different roles to play, we have different access, we have different abilities to impact the world. And I think bringing us all together so that we can in fact continue to make crypto a safer place to transact is only done in partnership.
Thank you so much.
Yeah.
And Claudia?
So I couldn't agree more with what Philip said. Public-private partnerships are crucial. It's also a lot of the work that my team has been doing for the past 2 years is try to develop these relationships. And when there are, it's not just responding to process, or if there's an incident that where we need to react quickly, knowing who to call, having a relationship with a particular company or entity can help us react faster. If there's a hack, if there's a heist and money's moving quickly, and we need assistance to freeze and seize funds as we're going through getting the legal process, having an entity that can react and work with us to help prevent the further movement of funds is critical. And so, when we look at the private sector, it's not just in terms of, as Philip noted, let's collaborate and we need each other to make this a compliant ecosystem. But many times, you have entities within the private sector that become victims themselves. And so when we have, something that is, when an entity is victimized but there's concerns about working with the government, well, what is the regulators going to do, or are there going to be private lawsuits? And I mean, the DOJ's perspective, my perspective is, if you don't help us, we can't help you. So we want to be able to have, this open communication and collaboration. And even, we're now talking with existing companies and entities, but even, kind of a drum up and beating is the developers, like Web3, as Jay mentioned. As people are building new companies, new entities, new systems, I ask the question, like, what is the functionality of what you're building? Whether you're building security, a commodity, or something else, what are you doing? What are you building? And having the clarity at the outset will help guide the guide rails that are built around it. Because unfortunately, as people are building things, they need to recognize that bad actors are probably going to try to exploit it one way or the other, and having the right guardrails in place at the outset and an open communication with the government is only going to help not just having a compliant ecosystem, but also their future business. Screening tools, as I mentioned, DeFi is one of the fastest growing segments in this space. But many organizations lack the visibility when it comes to having the information needed to prevent transfers of commingling of funds, money laundering, et cetera. And so having the right screening tools can help, for example, to avoid interaction with sanctioned activity and to be able to react and address things as they come up. So audit functions as well. So again, this is something that our team continues to do, and you know, with established companies and with emerging companies, and it's part of the effort to bring this to a more compliant ecosystem.
Thank you so much. Certainly those relationships are important before an event occurs, so that you do have those points of contact to reach out to, and everybody knows who's involved, and it demystifies that relationship on both sides for people to understand what the goals and objectives are, because we're all just trying to be safe. Moving on to our final question. We've heard a lot about the multitude of threats to financial service institutions and efforts to combat them today, which can be daunting. As we conclude this discussion, can you highlight your vision for the future financial services landscape and ways the RSA audience can help build a safer future? I'm going to start with you, Claudia.
So it's part of what I was talking about just now. It's the importance of these partnerships and transparency, and again, as Philip said, who knows what the future will bring. Your guess is as good as mine, but we'll continue doing the work in the space and you know, and inviting people to have an open dialogue with us, and you know, so that we can continue to build these partnerships and moving forward.
Yeah. I think there's a bunch of ways. Number one is, I sound like a broken record here, but number one is education. It really is, in this context, the silver bullet. And the thing about education is, none of you here in this room need to hear me talk about online safety. That's my guess. But you all have someone in your lives that does need to hear about online safety, right? And I think it is a conversation that we don't have enough. It is a conversation that we don't start enough with people in our lives who may not have the same depth of experience with technology, who might not have the same comfort with it, who might be a little bit scared of it, right? And it's a conversation that we should have at every opportunity. There's tons of resources online, both from Coinbase, but you know, ignore us for a second, right? You go on YouTube for 30 seconds and you can find something to send to somebody. You can find an article. You can find in your own experience a story to tell somebody, to educate them a little bit more on what it means to be safe on the internet. If you don't know anything, if you're telling me right now, Philip, I don't know what you're talking about, I don't know what to tell somebody, tell them this. Speed is the friend of the scammer in general, right? If you are either someone in this room or you're telling someone else, if you find yourself in a situation where you're making a decision, a financial decision, a life decision, whatever it is, and you feel rushed, you feel pressured, you feel like you have to do this like right now because this person or this entity, whatever it is, here's my advice to people. Find a rubber ducky somewhere. Doesn't have to be a rubber ducky. Talk to the wall if you want. Explain what you're doing to that rubber ducky, right? Sit down, really actually explain it. Talk through it with that rubber ducky. And if you feel like that rubber ducky is judging you for your decision, if you feel like that rubber ducky is looking back at you and thinking, really? You're gonna do that? Take a beat, talk to a human about it, right? It's okay. Whatever thing that you think you need to do is gonna be there in 30 minutes, in 60 minutes, in a day. So, if you don't know what to tell somebody, tell them that.
And if something seems too good to be true, it probably is.
Oh, 100%. No one's doubling your money overnight. Elon Musk is not on Twitter doubling your Bitcoin. It's not a thing. Don't believe it.
Enjoy.
Yeah, it's hard to follow after that, but I'll say everything Philip said, absolutely wise advice from him, words of wisdom. I'll leave you with this final thought, right? When it comes to money, there is a lot at stake. It basically, money works in the confine of legal system, law enforcement, and state, right? Things we take for granted. And the counter thesis is that there is a programmable money that is jurisdiction free. Just think about that and see if what Philip said and how does it add up. That's what I would leave you with.
Thank you so much. Want to thank you all for your time. Want to thank all of you for your time. I hope you got everything that you hoped for out of this session. And this now concludes our session. So thank you again and have a great rest of your day.